Today we're tackling common misconceptions I hear from aspiring mortgage brokers and even some loan officers that it's difficult to make good money in being a mortgage broker. Now, I understand why this might be a concern. My first mortgage coach even told me mortgage brokers can't make the margins needed to make a lot of money. But I'm here to tell you, after 10 years of running my own brokerage, definitively, that's simply not true. You absolutely can build a thriving and profitable business as a mortgage broker. You just need to learn how to do it. In fact, the opposite is true. As long as you learn how to be profitable, there's nothing better that you can do for your career. But there's also nothing worse than pouring your heart and soul into your business only to find yourself constantly struggling financially. Trust me, I've been there, learned from the mistakes, and I'm here to share the secrets to success when it comes to income as a mortgage broker. Welcome back to the Collab channel, where we're here to help loan officers and mortgage brokers build successful businesses. I'm Megan, a mortgage broker veteran with 20 years of experience, and in this video, we're diving into making some money, honey, as a mortgage broker and the factors that can really impact those dollars that you earn. So how do you break free from the myth of the low earning mortgage broker and actually make it a reality? It all boils down to smart business practices that every business owner needs to learn. So let's break down some of the key factors that impact your bottom line when you own a mortgage business. So the first one is pricing strategy. Now, this might seem obvious, but setting the right commission rate is crucial. Are you aiming for 2%, 225 basis points, or even 275? And it might seem like a small difference as a fraction, but let's look at the impact on a mortgage brokerage closing, say, 75 million in loan volume. So at 75 million, if you are getting a 200 basis points for your brokerage, you're bringing in 1.5 million in money. Let's bump that now to 225 basis points, and your income increases, your revenue increases to $1,687,000. That's $187,000 more just for a quarter. If you don't want to originate one day, this should be your wake-up call that pricing correctly is one of the utmost important things. This demonstrates the power of strategically pricing, because every little bit adds up. It's very easy to say, oh, this loan amount's high, so I'm gonna go low. Don't do it, stick with your pricing strategy. The next thing is overhead costs. Every business has expenses, and mortgage brokers are no exception, but here's where many new brokers stumble, in my opinion. Negotiating a good lease and consider being cost effective when you're picking where you're going to work. Maybe doing a co-work space or a sublease instead of running a whole office when you're just getting started. Weigh the benefits of offering things like benefits to your employees. And the third thing is your team size. This is a big one. Many high-producing loan officers from traditional lenders make a crucial mistake when opening their business that I see: over hiring or bringing too many team members. Remember that every employee adds to your overhead with salaries, employee taxes, benefits. Consider outsourcing certain tasks to keep your overhead lean at first, and then when you can learn how much margin you have, you can add people in later. The fourth area is loan officer compensation plans. So are your loan officers actually generating a profit for your brokerage? You think it's just going to bring in money, but it's essential that you have a clear compensation plan that incentivizes production while ensuring your business is profitable. The first group of loan officers we brought in, we learned we weren't profitable those first 3 months because we did it wrong. The fifth thing is product diversification. Don't limit yourself to just mortgages. Explore offering additional financial products, non-QM, home equity loans, to increase those revenue streams, and then starting to do other ones after that. Now, my personal favorite 2 habits when it comes to profitability as a mortgage broker, and a lot of people skip over this one: financial review. Develop a habit of reviewing your financials every single month. Compare them to your budget, and if you didn't do a budget, make sure you do one. And identify areas where you can cut costs or optimize pricing. Compare. If you budgeted for so much but spent more, you need to look into why. And the last thing that impacts your profitability is continuously digging into one area. So Never stop learning about your process and what you're spending money on. Every month, pick one area that you dig into what all the costs are. Here's an example. Appraisals. Are loan officers consistently collecting fees for appraisals if you see a line item on your profit and loss for appraisals? Credit bureaus. Are you using the most cost-effective service from the right credit bureau? Or subscriptions is one that we noticed. All of a sudden we had a list and we were subscribed to things we weren't even using any longer. So make sure you're going back and you're looking at the things that you're using in your business, that you're aware, because you will find things throughout the years that you own your business where you'll be able to save money, make more money, because if you're going to be a business owner, you should be able to have the benefits of taking on that risk and taking a chance when others didn't. Even if you tackle just 1 to 2 of these strategies when it comes to owning your own mortgage brokerage, every year you will become more and more profitable. I hope you found this video helpful as you are exploring your mortgage broker journey. And if you'd like to talk to someone on our team about starting a mortgage brokerage or getting consulting or services for your mortgage brokerage, you can click on a link in the description. Otherwise, make sure you hit subscribe, hit the bell so you don't miss one of our next videos. Can't wait to see you there.